Hello, welcome to another update video. Today we want to take a look at the Nikkei index. Nikkei, we take a look at the movement from the 2008 lows, and we can see that the market rallied in what I would call a wave one of a larger 5-wave pattern, which topped in 2010. Then we had a wave two pullback, bottomed in 2011 at around 8,100 points. From there, a long third wave rally happened into the September 2018 highs, topped around 24,300, then a wave four low, bottomed at around 16,350. And now we're working on this fifth wave, which looks a bit strange. So I don't have, very strong confidence in this count. It might extend further to the upside, but this wave five is pretty much full to the upside. We have in that wave five, which started in March 2020, also 5 waves completed, with again a very much extended fifth wave. Looking at this larger wave degree here, the large fifth wave has now reached, when we look at Fibonacci extensions, which are common targets, it's reached just above the 61.8 extension level, which is a very common target for a fifth wave. A little higher, and we reached the 78.6 extension at 43,656, which is the next larger degree target, and would still be acceptable for a fifth wave. So this is the view on the larger time frame. So if we now take a look at this rally from the 2020 lows, you can see that this is another 5-wave pattern to the upside, in which we're currently in the fifth wave, which is also very much extended. And we could indeed have topped here in wave 5 of 1 in March. So yeah, it's possible that a long-term top is in. The way for me to track this is now I'm tracking downside against the May high, which formed at 39,400 points. So my view is similar count to what I'm observing, for example, on the SPX chart, even though it's noteworthy that here the rally from the April low is much weaker than, for example, on the SPX, which actually made a new high. So, but still, this confirms the view that this could be an A wave down, a B wave rally, and we might have started the C wave decline. However, wave one of what would be wave C is only a 3-wave decline. So it definitely keeps the door open for higher. It's not a strong leaning towards the start of the C wave, but it's preferred at the moment. It would have to be confirmed further, however, with a break below the May low, the 30th of May low at 37,600 points. And any break below the April low would confirm further that we're heading down in wave C. Now, in the white count, this would be an initial ABC structure of a larger wave 2, I don't know where it is now here, which might land somewhere or end in the region of the wave 4 of one lesser degree. Basically, we talk about the March 2020 lows. It's not an exact target, but it's sort of where these normally end. So I haven't labeled the whole thing because it's impossible to say how corrections typically unfold, but I start by tracking an ABC structure, and the first step of confirming really that we're heading to the downside in a larger wave 2 would now be for the market to break below the May and then the April lows and fill in the 5-wave move. After which we should see another B wave rally, which could even overshoot, and then another C wave decline, which could lead to a major crash. Already this could be a major decline, especially if we break below the May lows or the April lows. Okay, what happens if we break above the recent high at 39,430? I'm talking about the May high. For me, it would be likely then that we're simply extending this B wave rally that started in April, possibly to the end of the resistance area, 40,126. It can always go a bit higher, okay, but if I'm talking about Fibonacci extensions and I measure this move up, compare it with what could be coming, yeah, we talk about here the area between the 78.6 extension at 39,800 and the 100% extension, 40,400. So there's a bit of an area of confluence there that this extended B wave could reach. So that would be my short-term bullish alternative, out of which, of course, more bullish structures could evolve, but that would be my next best scenario to the upside. Of course, there's no guarantee that a larger degree top is in. It would be a major top, so it takes a bit of time to confirm. We need to be mindful that after the next decline, the rally, if it's corrective, would further confirm the white count. Whereas basically it could be a larger A be C structure. Whereas if the rally is impulsive, it could be circle wave 5, basically, which is just an extension of the white count. Important, I think, at the moment is just to be aware of the nearest resistance area, which is this one here between 38,878 and 40,130. And it's worth knowing that, yeah, against, for example, the May low, you could still focus on higher if you want to, but my view is the risk is now quite high. So I just let the market tell me if we've started that stronger decline. Unfortunately, not a great short trade setup from here because the move down was in 3 waves. Had this been a 5-wave move down, we would have a great short trade setup. Even now, it could act as a short trade setup. The problem is only probabilities are not really on our side, given that this decline into the May lows was just a 3-wave decline. But then invalidation for a short trade setup would be the May high. Yeah, that's my update about the Nikkei. Hope you enjoyed the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.